December 2025, a conference room in Beijing. Not a missile launch, not a military parade, just a room full of bankers with spreadsheets. They press a button. $850 billion of American debt begins flooding the market. No declaration of war, no press release, just a silent execution. The world thinks power is measured in aircraft carriers and nuclear warheads. That is a pleasant lie we tell ourselves. Real power is measured in Treasury bonds and interest rates. China just pulled the trigger on the largest economic weapon ever aimed at American soil, and most people will never even know it happened. For decades, we were taught that America won the Cold War because of missiles and diplomacy. Wrong. We won because we controlled the ledger. We made the world dependent on our currency. We forced every nation to hold our debt just to participate in global trade. It was the greatest con in human history. We printed paper and they gave us oil, steel, electronics, and labor. We lived like kings on borrowed time. But every con eventually collapses. And the collapse always starts the same way. The creditor walks away from the table. That creditor is China, and they are walking away right now. Look at the surface, and America seems invincible. The dollar is still king, the military spans the globe, the stock market hits new records every month. Billionaires launch rockets for fun. But peel back that shiny exterior, and you see the truth. The foundation is riddled with cracks. The economy runs on debt the way a junkie runs on heroin. We borrow $2 trillion a year just to keep the lights on. We are not funding growth, we are funding survival. And survival only works if someone keeps lending you the money. For 2 decades, that someone was China. They sent us cheap goods. We paid them in dollars. Then they did something brilliant. They took those dollars and loaned them right back to us. They bought Treasury bonds. This created a perfect cycle. We got cheap products and cheap interest rates. They got a stable currency and a place to park their trade surplus. It was symbiosis, but it was also a trap. Because the moment China stops buying our bonds, the entire system breaks, and they have stopped buying. Worse than that, they are selling. The official numbers say China holds around $760 billion in standard treasuries. But that is not the full picture. Add in the debt from agencies like Fannie Mae and Freddie Mac, and the real number is $850 billion. That is not just money. That is leverage. That is a knife pressed against the throat of the American economy. And right now, Beijing is applying pressure. They are not doing this randomly. This is a coordinated strategy that has been planned for years. Every move has been calculated. The timing is surgical. The trade war of 2026 shattered the old relationship. Washington slapped 60% tariffs on Chinese goods. That was a declaration of economic hostility. Beijing responded the only way a creditor can respond. They stopped recycling dollars into American debt. Instead, they started converting those dollars into something the U.S. government cannot print: gold. For 28 months in a row, China has been buying gold. That is a record. They are trading paper promises from a hostile government for a hard asset with no counterparty risk. They watched what America did to Russia in 2022. We froze their dollar reserves overnight. We turned their treasury bonds into worthless hostages. China learned the lesson: never hold assets your enemy controls. So they are moving everything they can into physical bullion. This is not investment, this is insurance. Insurance against financial warfare. But here is where it gets dangerous for you. The problem is not that China is buying gold. The problem is that nobody else is buying the bonds China is dumping. The United States government is a machine that runs on debt. Every single week, the Treasury has to sell billions of dollars in new bonds just to cover the deficit. It is like paying off one credit card by opening another. This only works if someone shows up to the auction and buys the debt. China used to be that guaranteed buyer. They were the whale at the poker table. Their presence kept the game stable. But now the whale has left the casino. Not only are they gone, but they are also cashing in their chips on the way out. They are dumping their old bonds onto the market. This creates a supply shock. Imagine a neighborhood where every house goes up for sale on the same day, but nobody is looking to buy. Prices collapse. The bond market works the exact same way. When supply exceeds demand, the price of bonds falls. And here is the iron rule of fixed income markets. When bond prices fall, interest rates rise. It is a seesaw. They move in opposite directions with mathematical precision. So when China dumps bonds onto the market, the yield on those bonds has to spike to attract new buyers. This is already happening. The 10-year Treasury yield is climbing, even though inflation is supposedly cooling. The market knows something the headlines are not telling you. There is no marginal buyer left. The Federal Reserve is doing quantitative tightening. That means they are selling bonds, not buying them. American banks are tapped out. They already hold trillions in government debt, and most of it is underwater. Japan is in crisis mode, trying to defend their own currency. They are selling U.S. treasuries to raise cash. The Saudis are flirting with the yuan and exploring non-dollar oil deals. The entire support system that kept American interest rates artificially low for 40 years has evaporated. That leaves you, the American saver, the retail investor, the pension fund. You are now the buyer of last resort. But to convince you to buy a 10-year bond, the government has to bribe you. they have to offer a much higher interest rate. This forces yields higher across the entire economy. Every loan gets more expensive, every credit card, every car payment, every business line of credit. But the most brutal impact is on housing. The 30-year fixed mortgage rate tracks the 10-year Treasury yield with a reliable spread. If the 10-year yield hits 6%, mortgage rates will mathematically hit 9%. That is not speculation. That is arithmetic. And 9% mortgage rates will destroy the housing market. It will freeze transactions. It will collapse prices. It will trigger a wave of foreclosures as adjustable rate commercial loans come due and cannot be refinanced. We are talking about trillions of dollars in real estate value vanishing. This is asymmetric warfare. China does not need to fire a missile. They just need to keep selling bonds. Every sale forces rates higher. Higher rates choke the American consumer. The consumer is 70% of the economy. If the consumer stops spending, the entire system seizes. China knows this. They studied us. They know our weakness is housing wealth. They know we are addicted to the feeling of being rich because our home value went up. Remove that feeling, and we panic. We stop buying. The economy collapses inward like a dying star. The Federal Reserve is powerless. That is the part nobody wants to admit. We were taught that the Fed controls interest rates. That is only half true. The Fed controls short-term rates. The market controls long-term rates. The Fed could hold a press conference tomorrow and cut rates to zero. But if China dumps $50 billion in bonds that same afternoon, your mortgage rate will go up, not down. The Fed has been neutered. They lost control of the long end of the curve. This is what economists call fiscal dominance. In simple terms, the size of the debt pile now matters more than the interest rate policy. The debt is so massive and growing so fast that no amount of rate cuts can overcome the weight of it. We are entering a new era, an era where the Treasury Department has more power than the Federal Reserve, and the Treasury has no good options. They can either force the Fed to print trillions to buy the bonds China is selling, or they can let interest rates spiral and watch the economy collapse. Both options end in disaster. Option 1 destroys the currency through inflation. Your grocery bill doubles. Gas hits $10 a gallon. We become a banana republic with nukes. Option 2 destroys the economy through deflation. Mass unemployment, bank failures, soup lines. This is the trap Beijing has engineered. Heads, they win. Tails, you lose. And they are betting that American politicians will always choose inflation because it delays the pain. Politicians are short-term thinkers. They want to survive the next election. They will print money to keep people calm, even if it destroys the country in 5 years. You are probably wondering where the money goes when it leaves the bond market. The answer is gold, commodities, farmland, physical assets that cannot be printed by a government. The smart money sees what is happening. Billionaires are running. Family offices are liquidating bonds and buying hard assets. The wealthy are moving down the pyramid of risk. They want to be as close to tangible reality as possible. Because in a currency crisis, the only things that hold value are the things people actually need to survive. China is not alone in this. The BRICS nations are following the same playbook. Brazil, Russia, India, China, South Africa. They are building alternative payment systems. They are settling trade in local currencies. They are bypassing the dollar entirely. This is not theory. It is happening right now. Russia and China trade oil and gas in rubles and yuan. India buys Russian oil in rupees. Saudi Arabia is accepting yuan for oil shipments to China. The petrodollar is dying. For 50 years, the petrodollar was the foundation of American power. If you wanted oil, you needed dollars. If you needed dollars, you had to buy U.S. Treasury bonds. This created permanent global demand for our currency. It allowed us to print money without consequences because the world had no choice but to hold it. That system is breaking. The world is realizing they do not need dollars anymore. They can trade directly in their own currencies. This reduces demand for the dollar at the exact moment supply is exploding. The U.S. government is printing money faster than at any point in peacetime history. We are running $2 trillion deficits, while the global demand for dollars is collapsing. That is the recipe for hyperinflation. Not next decade. Not in some distant future. It is already baking into the system right now. You see it at the grocery store, you see it in your insurance premiums, you see it in the cost of everything that matters. The price of survival is going vertical, and yet the stock market keeps going up. People think this means the economy is strong. They are wrong. The stock market is not rising because companies are thriving. It is rising because the currency is dying. This is the Venezuela dynamic. When money becomes worthless, the stock market goes to the moon, but you're not getting richer. You are just watching numbers inflate while your purchasing power evaporates. $1 million portfolio does not mean anything if a gallon of milk costs $100. The bond market knows this. That is why bond prices are collapsing. Bonds are a bet on the future value of currency. If you think the currency is going to be destroyed, you do not want to hold a promise to be paid back in that currency. You want out. You want gold. You want land. You want something real. The bond vigilantes have returned, but this time they are not domestic investors worried about inflation. They are foreign governments weaponizing our own debt against us. Look at what is happening in the plumbing of the financial system. There used to be a safety valve called the reverse repo facility. It was a pool of about $2 trillion in excess liquidity. It acted as a shock absorber. When the government needed to sell debt, they could tap into this pool. It kept the market stable. But as of this month, that pool is empty. The reserves are gone. That cushion has been spent. Now every single dollar the government borrows has to come directly out of the banking system. There is no buffer left. This is the perfect storm. We are hitting a liquidity cliff at the exact moment China is dumping $850 billion in bonds. It is like running out of gas while driving uphill and having someone slash your tires at the same time. American banks are scrambling. They are sitting on over $600 billion in unrealized losses. Those are bonds they bought when rates were low. Now rates are high, and those bonds are worth 40% less. As long as they do not sell the bonds, they can pretend the losses do not exist. But if depositors get scared and start pulling cash, the banks have to sell. And when they sell, they lock in the loss. They go bankrupt. This is exactly what killed Silicon Valley Bank in 2023. It was a preview, a warning shot. Now the risk is systemic. It is everywhere. Regional banks are loaded with underwater bonds. If rates keep climbing, the holes in their balance sheets get bigger. China knows this. By dumping bonds and forcing rates higher, they are attacking the capital base of the entire American banking system. If the banks are insolvent, they cannot lend. If they cannot lend, the economy stops. It is economic warfare disguised as portfolio management. The Federal Reserve has lost its magic wand. In 2023, they launched an emergency program to save the banks. It worked. But that program has expired. It is gone. Now, if another bank fails, the Fed has two choices. Let it collapse and risk a systemic panic, or print trillions of dollars to cover the losses and destroy the currency. There is no third option. Both roads lead to pain. But the attack is not just happening in the bond market. It is also happening in the energy market. For decades, the petrodollar forced the world to use our currency for oil transactions. That system is unraveling. China is now the largest oil buyer in the world, and they are paying in yuan. They are using currency swap agreements with Saudi Arabia. They are building pipelines that bypass the dollar entirely. This reduces global dollar demand right when we need it most. Saudi Arabia is cheating on the dollar. For 50 years, they were loyal. If you wanted their oil, you paid in dollars. Period. That was the deal. It gave America an exorbitant privilege. We could print money and export inflation because everyone needed dollars to buy energy. But now the Saudis are seeing other people. They are accepting yuan. They are flirting with digital currencies. The marriage is over. And without that forced demand for dollars, our debt becomes much harder to sell. This is a pincer movement. China is attacking from two sides. They are reducing the supply of dollars by dumping bonds, and they are reducing the demand for dollars by buying oil in yuan. They are squeezing the dollar from both ends. It is a slow strangulation, and it is working. You can see it in the market. Treasury auctions are struggling. Primary dealers are being forced to buy unwanted debt. They are choking on inventory. Their balance sheets are clogged. This creates a liquidity trap. If a shock hits, now the entire system could freeze. Imagine trying to sell your house, but the door is welded shut. You cannot exit. That is the bond market right now. And treasuries are the collateral for the entire global financial system. If the treasury market seizes, everything seizes. ATMs stop working. Credit cards stop processing. Trade stops. This is the nightmare scenario that keeps central bankers awake. They are terrified of a sudden freeze, a heart attack in the plumbing. That is why the Fed is talking about slowing their own bond sales. But it is a band-aid on a gunshot wound. The real problem is simple. The government spends too much. We have been living beyond our means for decades. We relied on China to fund our lifestyle. Now China has cut us off. The spending has to be paid for somehow. And the only way left is inflation. Print money. Dilute the currency. Rob savers. It is a stealth tax. Nobody votes for it, but everyone pays it. You pay it at the pump, you pay it at the store, you pay it every single day. China is forcing America to choose between two poisons, hyperinflation or depression. They are betting that politicians will choose inflation because it is the path of least resistance. It delays the pain, it kicks the can down the road. And history suggests that bet is safe. Politicians always print. They always choose the easy lie over the hard truth. They will destroy the currency to avoid admitting the party is over. The stock market will keep going up in nominal terms. But do not confuse that with wealth. It is an illusion, a mirage. The numbers look good, but your purchasing power is dying. You're not getting richer. The ruler is shrinking. And most people will not realize what happened until it is too late, until their retirement account says 1 million, but a loaf of bread costs $50. The safe asset of the last 40 years is now the danger zone. U.S. Treasury bonds used to be risk-free. Now they are full of risk. The 60-40 portfolio is dead. It relied on bonds being a hedge against stock market crashes. But in an inflation crisis, stocks and bonds fall together. There is no diversification. There's no safety net. China has exposed the glass jaw of the Western financial system. They showed the world that the emperor has no clothes. Other nations are copying them. Central banks around the world are buying gold at record pace. They are not doing this for fun. They are preparing for the end of dollar dominance. They are building a lifeboat while the ship is still afloat. And the American consumer is the one left holding the bag. Your standard of living was artificially high because the dollar was king. As the king loses the crown, everything you buy gets more expensive. Imports cost more. Energy costs more. Food costs more. The war price has replaced the China price. For 20 years, cheap Chinese labor subsidized your lifestyle. That is over. Factories are relocating. Supply chains are fragmenting. Politicians call it friendshoring. It sounds nice, but it is expensive. Safety costs money. Redundancy costs money. And you are the one paying the bill. Like the U.S. economy is 70% consumer spending. If you stop spending, it collapses. Right now, the only reason you're still spending is because you feel rich. Your house went up. Your stocks went up. That is called the wealth effect. But here's the nightmare. If China crashes the bond market, mortgage rates hit 9%. If rates hit 9%, housing crashes. If housing crashes, the wealth effect disappears. You stop spending. Businesses fail. Unemployment spikes. Tax revenue collapses. The deficit explodes. The government has to sell even more bonds. But more bonds means lower prices and higher yields. It is a doom loop, a death spiral. Each step makes the next step worse. China is feeding this spiral. Every bond they sell accelerates the crash. It is methodical. It is cold. It is a siege. They are cutting off the supply of cheap credit to the fortress. And inside the fortress, the commanders are lying. They are telling you everything is fine. The jobs report looks good until they revise it down 2 months later. GDP growth is fake. It is driven by government borrowing, not real production. We are spending $1 to get 50 cents of growth. That is a losing trade. And now the interest on the debt is exploding. Soon it will consume the entire budget. No money for infrastructure, no money for schools. Every tax dollar will go to Social Security and interest payments. This is the straitjacket China has engineered. There is no wiggle room, no flexibility. If a recession hits, now the government cannot stimulate without destroying the dollar. We are flying without a parachute, and the ground is rushing up. The bond vigilantes are back, and they want blood. That blood will come from your retirement account. When governments cannot pay bills with taxes, they pay with inflation. Inflation is theft. It is a tax you never voted for. You work for dollars. You save dollars. But they print dollars for free. Every new dollar makes yours worth less. They are stealing your time, your labor, your life. China understands this. That is why they are leaving. They refuse to hold a dying currency. Central banks around the world are running for the exit. According to the World Gold Council, they are buying more gold than they have in 50 years. They are not buying it because it is shiny. They are buying it because it is the only neutral asset left. In a world of financial warfare, gold cannot be frozen. It cannot be sanctioned. It does not depend on a promise from a hostile government. It just is. The People's Bank of China is leading the charge. They are converting their trade surplus into physical bullion. But they are not stopping there. They are also buying copper, lithium, farmland, real assets, things you need to build and feed a civilization. They are preparing for a world where paper promises are worthless, a world where only real things have value. This is basic economics. Bad money drives out good money. The dollar is bad money. We are printing it to infinity. Gold is good money, and the nations that produce real goods are hoarding it. Ignore what bankers say. Watch what they do. In public, they call gold a barbarous relic. In private, they stack bars in vaults. They are lying to you. They are front-running the collapse. The old rules are dead. Bonds are not safe. Cash is not king. The only things that will survive are things that cannot be printed. Hard assets, physical goods, gold, land, energy. These are the anchors in the storm. You need to look at your net worth right now. Be honest. How much of it is real? If everything you own is in a bank account or a retirement fund, you are vulnerable. You are exposed. You are the bag holder for a government that has no plan except to print and pray. The everything bubble was built on cheap credit. The everything bust will be caused by expensive credit. It is gravity. If money costs 6%, stocks cannot stay at record highs. The math does not work. A mean reversion is coming, and it will be brutal. This is why billionaires are selling. Zuckerberg, Bezos. They are dumping tech stocks and buying land. They are moving down the risk pyramid toward reality. They know speculative assets get destroyed in this environment. You need to think like a central bank. Hold reserves outside the system. Diversify into things that have worked for 5,000 years. And here is the rule. If you cannot touch it, you do not own it. A gold ETF is not gold. It is a promise from a bank. If the system crashes, they will pay you in cash. worthless cash. China knows this. They take physical delivery. They do not leave their gold in New York or London. They bring it home. This is draining the vaults and creating a physical squeeze. Soon there will be two prices for gold: the paper price on a screen and the real price you pay for a coin in your hand. The same applies to real estate. A house is only a hard asset if you own it free and clear. Mortgages, rising insurance, and taxes turn it into debt. Local governments are broke. Empty towers don't pay taxes. So your home becomes a tax farm. Liquidity is essential, but not cash. Cash is trash. True liquidity is assets anyone, anywhere will accept. Gold is liquid in every crisis. No translation, no electricity, works in a blackout or war. China knows this. They are insuring themselves. You need the same protection. Do not wait for permission from the Fed. By the time they admit a crisis, the gates will be closed. CBDCs, programmable money, will track and restrict your wealth. The dollar's supremacy is ending. Fiat dies, math does not. China is betting on reality while the US borrows for 40 years. The storm is here. Empires fall not from war, but from running out of money. History is happening now. Protect yourself. Understand the forces. Build your ark with real assets before the ledger balances and the creditor comes calling. Subscribe to this channel if you want to stay ahead, if you want to understand the real forces that shape history while everyone else is lost in the noise. The next collapse is not a mystery. It is math, and we are going to walk through it step by step so you are never caught off guard. I will see you in the next one.